All right, all you devils, how's it going? Sam here with you. We are, oh shit, what is it? Friday the 12th here. All right, got him a little bit behind here. It's 12:45 here. I've been staring at these Bitcoin charts for a couple hours now. Really looking, is there something I'm missing? Is there another way to look at this? Have we gone far enough here to where we can eliminate some of the more bearish counts? And oh, I know this is the most hated count in all of crypto on Bitcoin, but we still can't eliminate it, right? It's not, we didn't do enough here to where we can pull it off the board and say, okay, disqualified, not a contender here. And I'm not going to spend a lot of time here, but there are a couple of things here worth noting. Well, so a couple. Sure, let's start with the obvious, right? So once again, just a classic demonstration of, well, I've kind of been harping on this quite a bit lately. Why? So you bought the breakout here, hammered. You bought the breakout here. Well, you may still be long, right? You may still be in it, but if you're, I'm on a daily, you're playing with leverage, you're probably a little uncomfortable. Maybe not, right? Depends how aggressive you are. It's, with the idea that this is the significant low here, we haven't got what we kind of need here, right? We need, okay, maybe that's the one, maybe that's the two. Well, we completed something here. Well, it would appear at this point that we've completed something here, which is making it a little more frustrating because we didn't quite go far enough to where you really lean into the three here, and we're so far past this. We're not getting this, which is what we need, right? We need that definitive 1, 2, 3. Oh, okay, it's not coming lower. We're going to hold at a 4, and then it doesn't have to be an impulse, but at this point, at least we know we've got this swing longer than this swing, so we have a contender for an impulse, right? If we were going to do that. But we don't have enough here yet to where we can pull this off the board. So I know nobody likes this count, and I'm not a big fan of the idea that we could be coming back down. Well, here, just looking at this big cluster down here, what do we talk? We could 40 to 30. Could that happen? Well, of course, anything can happen. But technically, see, what's making this a little bit problematic here, and we're going to dig into this in the bull counts here, you can pretty clearly see the potential here for, right? So looks like there's a 5 there. So what are our options, right? Either it's 1, 2, and this is our 3, and we're going to go 4, 5, right? Then we can pull this and completely out of contention. Or as you can see it here, the ABC still very much a contender here. Now we've retraced here right to here. Let's do it this way. We retraced right here to the basing action here. We talked about this last week. Basing. Right now it's not massive, right? We have bigger ones here from this consolidation. We obviously have this one. Then we have the big data here. Now I am in log scale. I didn't take it out. It's not dramatically different. You can see it here, but I'm going to stay in log here just since we're out on these longer time frames. In log scale, we got here, this is in the 50, we're to and through. Now, if we look at our swing relationships from the A to the B, now members, I know you've all done this. A little shy of the 100. Now, we're long enough, right, if we take it out of log, right? So longer is longer, right? So I had that question the other day. In the live stream, if it's not 100% in log, do we still hold for the idea that it needs to go further to qualify? No, longer is longer, right? So if you're wondering, right, take it out of log and see, okay, well, we're clearly longer than the A wave here. But for analysis, just in terms of kind of getting a better read on this and being able to see some of that separation, just be cautious here. So ideally, now if we're going to pause here, then it becomes a question of, well, where are we? So, oh god, let's see, can I even do it here? Well, here we'll just stay here for a minute here. Like could be 3, 4, 5. Okay, so there's an impulse. God, are we really going to do a 1, 2 here? Is that what bulls are thinking? And then we're in the 1, 2, 3, 4. We've already overlapped, so we're going to do a leading diag coming out of here, meaning that we'd have an incredibly shallow 4, statistically, right, historically speaking. we'd have this is the only decent, right? So in terms of a retracement, at least we don't quite make the 50, but you can understand this one, right? At least we come back to the structure here. You can kind of just, come here, you fucker, come here, right? You can just look at that and say, okay, prior resistance became the support. And the same thing here, you could almost do it this way, right? And just say, okay, prior resistance became the support. Right, pay attention to that, right? Market's very responsive to that. It doesn't matter what the asset is. That's how the markets react. Now we don't really have any resistance up here. We don't have any resistance up here, but we can see, okay, well, this is tested once. Oh, right, this would obviously be something to be paying attention to. If we start any of these corrections coming down here, just again, I like to remind you, I'm as bullish as anyone long term, but the pattern here is just not really cooperating, at least not yet, right? So we still have to consider this. Now the triangle, I suppose we can't pull it off the board here completely because we could have this could be a B, this could be an X. We still here, if I bring it over, here it is in motive wave. So if I highlight this, you can kind of see how that might play here. And I'm just using the high probability locations here. So historically, most probable location for the C relative to the B would be 618 here. Now this most probable would be 618, but now we're blowing up the triangle here. So likely you might hold here at a 50. So this put the 4 way over here in the mid 40K range. And you'd still come out of here with a 4, right? And then off to finish the 5th. So it's frustrating, right? I'm dying to pull that off the board so we don't have to keep looking at it, but it's just not out of reach yet. So part of the reason I mention that is just because if we start to come down here, right, you don't want to be, oh God, how could this be happening? Oh my God, right. Right, you can almost map it out here just based off support and resistance, right? And then ending up back down here, right, at our, what is still a contender, right? It's still a contender to be the 4. Oh shit! I mean, we could do this a couple of different ways. We could do ABC. We could do WX. Then you'd be looking for 3, right? An ABC to finish this. I know, right? I don't think that's what's likely to happen here, but I can't eliminate it, right? So I have to keep it as a contender. I have to keep mentioning it here just so that no one is shocked should we start to sell off a little bit. It wouldn't be terrible news, right? If we were going to do something like this, boy, that sets up the push higher. It actually would be, I think, healthy for the market and more bullish long term. The push, the struggle, the push, the retrace, not quite what I would hope to see up here. Not that I'm sorry about seeing a new all-time high, right? Don't misunderstand me. But just the technical pattern here makes me I continue to be a bit cautious. Maybe that's paralysis of analysis here, but I'm just paying attention to what I see here. Now, so let's, oh shit, what do I have over here? Oh, we'll come back to that. Okay, so let's go over here. I got this a couple of places here. So let's go to a 2 hour here. All right, so here's a couple of contenders here for the bull side here, and then we're gonna basically eliminate some of the Elliott and just do kind of raw dog TA. Okay, so so here's what that bulls seem to really be locked in on so let me bring it up here. So as we've talked now, oh shit, maybe I'll take this out to a 4 hour. Okay, 4 is in. All right, well, here's our correction, right? So I mean, we've gone from 29K to 69K, right? So I feel you, bulls, right? I'm not trying to pour water on it, but I'm just kind of working through, as an Elliottian, how are we gonna pull this off? How are we gonna get out of here? Well, it's just based on what's in front of us here, and just working through what I can see, where are the 5s, where are the 3s. If this is a 4 and we've gone 1, 2, well, this is where it gets a little tricky here, and this is typical of Bitcoin. So we have this extended rip here, which. So if I go back to that 60-minute, what you do notice here is that from this pivot here, there's a clear impulse that finishes, right? So for 1, 2, 3, 4, there's the 5, right? So we've got this impulse here. We have to factor that in somewhere. So what did we finish there? Well, we've already got a new high here. So there's a bit of a process of elimination happening here. I just kind of hinted this as a possibility last week here, that for much of the week we had been thinking, oh, 3 was here, 4 was here, up for the 5. Now, so the implication being 1, 2, 3, 4, 5, we completed the 1 of the next leg. So 1, 2, 1, 2. Well, so of course I hesitate on that count, given how shallow it would be. So let me get this back over here. So there's 38 to the tick. Now, it's not like we've never seen a 38 on a 2 before. However, it sure makes you think, well, that would be a reasonable contender. If we're tapping the 38, you might think, oh, 4, right? Just be more probable. So perhaps you're pushing the 5 up here, and you're gonna create an extended third, right? So let's get you off of there. Come here. So bring you over here, right? So now at least the retracement here and coming back into all this structure kind of makes sense. 1, 2, big extension in the third, right? Bitcoin's prone to this. I mean, Bitcoin's prone to it, right? So these kind of here, I put that in log scale. These kind of little extent. Well, you'd have one here, right? So I mean, just coming off of the COVID low. Look at the 3. Right, assuming that's the 3, right? One of these pivots is the 3, right? So massive extension, right? So could we be doing that again up here? Well, I don't see any reason why we couldn't. Now, the counting it gets a little funky. It looks like you'd have to go 1, 2. Oh, see, these liquidation wicks just kind of fuck you up. I mean, it's just a pain in the ass, right? For an Elliott, I mean, you got it. They're all over the place, right? Bitcoin's very prone to this. Here's one, here's one, here's one, here's one. God, they're everywhere, right? I mean, you look around, you've got pump wicks up, and then these liquid. Here's another really brutal one. These are really painful, and traders get hurt doing this, right? Which is why, with Bitcoin in particular, you got to really be on top of your game if you're going with heavy leverage. Okay, but let's consider that. If this is the 4 and this is the 5, do we really have enough here to finish that? Oh, let's see. Let's come back over here. Oh, shit, where did I have it? No, I think I have it over here. Hang on a second. This is why it takes me an hour to get ready here. Well, we'll just do it here. I may have it over in Motive Wave. Let me just clean up some of this here. Give me a sec here. Oh, shit. Where'd you go? Let's put it in log here. Well, that's all right. It's not creating a problem. I'm just kind of wicking off the support and resistance here because of that high volume node. So let's go down. Let's go to a 30-minute or a 30-minute here and look at what we have here. Now, if this is the 4, well, right, it looks like something it could have finished there. Well, so if this is the 1, well, let's just measure it out, right? So now I'm in log scale here. Let's take it out of log. All right, so we get a true measurement. Okay, so if this is the 1 here and this is the 4, let's just look at where we line up. Well, there's 200% the length of the 1. So certainly it's far enough here, right? If this is the labeling that's going to hold, if it's 1, 2, monster 3, liquidation wick takes us to the 38. Well, can we really finish that here? It's a tough one. How to read that? Let's get you out of here. So what do you do with all of this slop? Well, of course, I'm prone to go to the line chart here, where I can get a better look at what's really here. So we eliminate those liquidation wicks or the pump wicks, and we get a real clear view of it. Well, so just looking at that now, it sure looks like there's 5 down here, and that you'd have to go A, B, C. So what could that be? Well, if this is 5 down, likely candidate for an A. Looks like you can go A, B, C. Okay, so what would the alternate here be? That we've gone, oh, Jesus, this is so ugly. 1, 2, and we're going 3, 4, 5. Is that what a bull would be thinking here? Well, so first, let's go back in there. Let me here we're on a 30-minute. Does this look like we have a decent 1? Yeah, it does, right? So it looks like you can get here. Let's label it, right? This is not just be flipping about it. This looks like you can get that done there. Let's go there. Put it in white here. Well, Or I buzz through that. Okay, so something happened there. Well, now here we've got the, we get back to crazy town. Oh, see, this looks like you'd have to work this as a B. So so you have to go, here, let's label it. So 1, 2, 3, 4, 5. This would be the A. We'd go A, B, C. This would be the, hang on. Do it this way. So that's we start here. We're going to go A, B, C into the B. And now, waterfall. Boy, that's gnarly to go 1, 2, 3, 4, 5, but you may be stuck with it. All right, so there would be if we're thinking 1, 2. Ooh, it ain't pretty, but it's a contender, right? So there would be the A, right? So 1, 2, 3, 4. It's a slight overlap, so you'd have to do it as a diag. A, B, C into the B. 1, 2. God, I hate that. 3, 4. Look at the 4 relative to the 2, but that's what's there. Unless we're trying to work this as an A, B, C into so then we'd be thinking W, X, Y. It almost doesn't matter, right? So we've got a contender here right where all the structure is, right where we'd anticipate via those high volume nodes. Okay, is that a contender for a 1, 2? Well, here, let's change that color. So if this is going to go 1 as 1, 2, right? Do you want to be a buyer here? Well, here, let's go back to an hourly here where we can look at it. I think that's not unreasonable here. 4 would be in here. Let's put the whole thing back together. Now we're already to and through the median line, so we came up to the other upper parallel here. Oh, we've looked at the. It still is not. It's not an improvement here. If that's the one. Well, pardon me. All right, if we use the liquidation wick here, right, as opposed to coming into how I would count that, right? I would just ignore the pump wick, even though it traded there. All right, so if I work off of this, which would be the W, and then I go up, so I'm working this now as I'm just going dominant to dominant here, and I'm ignoring the pump wick. Well, at least I can kind of talk myself into a better reaction here. Now, would the algorithm do it that way? Probably not, right? Because something traded here, right? Software is going to go dominant to dominant, right? Dominant low, dominant high, right? So we're writing that structure here. You want to take a flyer there? It doesn't quite look like it's really there at the moment. So I think that is a bit of a, well, let's see what happens, right? So you'd have to be very disciplined. I would not give that any, maximum here. Perhaps this structural low here. You got a little high volume node, so you'd be taking it below the 707. So you'd have to really think long and hard. Wow, if this comes down this much further, am I still loving this as a 1, 2? All right, well, I mean, here it's getting a little tricky. Here's the other one you'd have to pay attention to for a cleaner Elliott count, right? You take that out. So, I mean, there's a trade there. Take the golden zone, looking for something like that. So that'd be 61.5, trying for 72. I mean, shit, nothing wrong with that. All right, and if it's going to play as 1, 2, big emphasis on if that's going to hold, if we're going to go, so if it's W, X, Y, and the 4 is in here relative to this 3, and we've gone 1, 2, well, the money wave is going to be up higher. All right, we'd be looking for this, 4, 5, so some of these potentially going higher. Let's push this up. 1, 2. You like that there? It might be a little early to take that, but you at least you've come back. You tapped this structure. You're getting a little bit of a push down to 30. Oh, that's tradable. So you can see the idea being, okay, we've had a reaction here. Now, if we're going to come down a little bit here and we test some of this, right? We've already kind of looked here. If that's going to come down a little bit further, and then we start to launch, right? Well, this reasonable contender here, if it's 1, 2, well, we're not anticipating it would. Even though I've just gone on about how Bitcoin can do these extended thirds, I wouldn't assume it when you're in the trade. Oh, this is going to be an extended third. I would just assume that you're going to get a 1 there. Right, so if this is going to hold and we get an impulse off of this, again, I don't have this, right? So I'm just trying to map this out. I'd be a little more comfortable if I got this would be the one I'd want, right? So then I know with clarity, okay, this is funky, but this is good enough, right? So the impulse here into the support here, I mean, here we take it here, we're ahead of the 7. Pardon me, let me get it right the way it should be, right? If that's A, B, we want to take it off of the proposed wave 1 high. So let's get you out of here now. All right, so we have a break here. So it's valid from an Elliott perspective. Here we lose the buy-side algo off of this pivot, but remember, algo is going to just go back 1, right? So we have a valid algo play here with that as a target, right? That would be the first target, but of course, if we're looking for a 3 here, we're looking for much bigger targets, right? We're looking for that, which would be right in the pocket of the bigger 618. 1, 2. Sometimes you just got to work with what the market is giving you. See, is that ideal? Right, definitely not. Right, that's not the ideal setup that you'd want to see. This kind of odd, I guess we'll call this a running combo. WX into that Y. I can't say I love it, right? But you, at least on the broadest sense, you're back into all of this basing action, right? So we're testing now. Here, at least I've got something technical. I mean, it's tradable. I wouldn't lever up here myself. I wouldn't, right? Just because I can't eliminate some of the bearish counts. Okay, with that said, let me come over here. Hang on one second. Shit, I'm gonna have to edit that too. Where am I? 24. Over here, I just was trying to simplify some of this, if we can. God, is this where I did it? Yeah, I think I did it here. Well, let's dig in there. So let's go down to an hourly here. Oh, I guess I did have it over here. This was kind of what I was working through. So we have all the detail here, which I just kind of took you through. So I think it's usually better as an educator to take you through the thought process rather than just bring you into a finished count. Because I know you're all kind of working through this saying, God, what the hell do we have here? Now, let's take it out of log scale. A, B, C, A, B, C, A, B, C, right? So this is the part that is the weakest, but I because of this 3, I think you're stuck here, right? So this doesn't work, right? You can't force fit. It's just not there. It's just too much of a force fit. Plus, I don't want to go 1, 2, 1, 2, 1, 2. It's just too many, right? So something here. This would be the idea that we completed the more traditional here, and that this was the 4, right? So which we just looked at. So if it's 1, 2, 3, 4, what did we finish there? Well, it's frustrating. Or pardon me, actually, it would be this way here. I went through so many variations here. I'm losing track. All right, so we do it that way. So this was the 4. So because of this, we're kind of forced to go that direction. So the idea here again would be the extension of the 3, right? But the more traditional count would be have this done. Now, are we going to go 1, 2, 1, 2? I just don't like it. I think that's too much hopium. So the alternate would be that this is the 4, right, via this WXY, and now we've gone 1, 2, right? So we're just at least on a positive note, you can see again we're coming back into the structure here. This is visible range, but at least we can kind of pull this up, and we have a very high volume node here as we stalled, and then we had the little range that broke us out of it. It's hard to lean into the idea that it's well here. So let me come back out. I think this is a little too much. You're just hitting the hopium pipe too hard. 1, 2, 1, 2, 1, 2. I wouldn't trade it that personally. It's just me. I just to go 1, 2, and that this is this is what counts I'm seeing, and this I'm seeing this in amongst the members too. 1, 2, 1, 2, 1, 2. Not down here at this degree. I know we looked at some of this on the very longer term where that gets a little bit more reasonable, but here I just think this is way too much hopium here. Oh, just again, kind of looking here, you can kind of see we're in a consolidation range up here. Now this is the little breakout we've had. Now we've come back here to the middle of the range. Note the Vegas wave here. It's tricky. Now, all right. So enough of the Elliott here. I think this still requires we need another swing or two to where we can lean into account here with any conviction right now. Oh, you know, at this basic level, what do we got? Swing, retrace, consolidate, swing, you know, big swing, consolidate here. Now, are we going to carry on? You know, rally base, right? It's kind of how the market likes to move when it's on a tear. Okay, so, where do I have that? I think I want to do this over here. Let's see. That's Bitstamp. This is coin. Let's do it on Coinbase here. Let's go to the 4 hour. So here I've left this as the obvious support. You know, should there be any sort of a retrace here, this range here that we sat in, built this huge barrier here. So I've got a couple of things on this. So let's just not pay attention to the Elliott count for a minute here, because I just wanted to kind of simplify this, because it can be this can get really tedious. I understand that, right? And there's no shortages of simpler approaches to the TA. All right, we can say it that way. So what I thought I would do here, shit, I should probably, oh God, it's going to probably take me too long to get rid of this, but let's go ahead and take some of this out of here and just kind of clean this up. I don't want to take everything off, but let's just kind of get this out of here. Say, is there a simpler way to do this? You'll often hear me say things like, you know, if the Elliott's creating more confusion than helping, and it's creating paralysis of analysis, get it off the fucking chart, right? If it's not helping you, get rid of it. Now, it's so ingrained in my approach to the market. It's very hard for me not to see it, but not everybody feels that way. In fact, we have many members that come in that they like, all right, well, I'll kind of pay attention to the Elliott when it's drop dead in your face. But you know, to the average Elliottician, they're going to play this like a 5, right? So I mean, and this is very tricky, right? So, which is not uncommon in Bitcoin, where it's, God, could be this, could be that. It really gets tricky, and a lot of people will just go, oh, fuck, bail, Elliott. It's too much, too many things to remember. You know, if it's helping you, use it. If it's not a requirement. As I said, we have many members that come in and they gravitate to, less Elliott influence here. My partner, Monte Crypto, while he's not ignoring the Elliott, has a different approach than I do here. So we have that kind of variety. But one of the things that I thought I would show you here is that just the power of a simple channel. Now, there's two kinds of channels that you can use with most TA packages. Since most of you are working with TradingView, and of course you can do this on Motive Wave or Thinkorswim or Ninja, whatever you're using. It's just the power of a simple channel. Now, I like the regression channel. I'll show you a couple of different ways that we can use this here. So you can just go swing low to swing high, right? So this is a very rudimentary kind of big picture. So here we are on a 4 hour. And just so, I don't want to assume that everybody knows exactly what a regression channel is. So we're just taking a swing low to a swing high. So whatever you draw, from the pivot to the pivot here. Now I did draw this here to include this last low before we went higher, and then we get a median, right, an average price of that range, and then we get 2 standard deviations on either side. So the idea being, with 1 standard deviation, you're 68.8, well, let's call it 70%, right? And at 2 standard deviations, you're over 90% of all that price action relative to the mean. So you can see here, right, of course, we do wick outside of it here. So it can't be just you take the first breakout, but in terms of a trend change, this is pretty powerful. So looking at that, so of course, ideally, the way to trade the break is not to trade the break. It's the next retest, right? So to confirm, hey, am I out of this downtrend? Okay, so very powerful. Now, you could do it. Of course, you don't have to do it swing high, swing low, because you can do this on these individual channels, right? So just to demonstrate this, because this is a powerful tool that you get mighty tight here. So maybe that doesn't work for you on the 4 hour, so you take it to the 2 hour. And say, well, here, is that helping me on the 2 here? Is this coming down here? Boy, we're out, right, on these wicks. But open that up, and it starts to be a pretty good reference for, okay, when I break that trend, if I retrace a little bit and I'm not going to carry on in the downtrend, you can think of it this way. If I break out and I get a higher low, right, good odds that I'm at least this part of the correction has changed. Now, obviously, right, it keeps going. So you would just same thing, right? So here's the low. Oh, I'd probably use the last high. All right, it's containing, right? Here's our average price, containing. All right, here's the break. Now you didn't get a full retrace, right? When the market's really being friendly. I mean, you kind of could call it here. Here's the retrace, and now we go back. What you hope for, right? So the perfect one is down, we come back, and then we go, right? So here you had so once you get the break, obviously lower low. Now we're getting a lower high. Lower low, right? Starts the new trend again, same thing, right? It's just very powerful. I think it's underutilized here. Now, because I've got to include this price action here, you see how now we get self-contained here. Now we're out. So I just kind of making the point that that's one way to do it, depending on the time frame that you like to trade. Of course, you can do the exact same thing with traditional channel if you prefer that, right? But I kind of like the use of the mean, right, the average as we're going down, and then containing with 2 standard deviations. I like that about the regression channel. So sometimes I'll pull it and I won't like it as much, or I might look at it and say, boy, this really plays better to me as a channel because now I see this little break. Now we're coming back to retrace, right? It's not, again, kind of drawing these randomly here. You might do it this way as well and say, okay, is this the channel? Right, is this the channel? So, well, there's a great example, right? This is what I was just talking about. Swing and retest after the break, right? That's the last kiss goodbye, right? Down it goes. That's a great example. And now let's just out of curiosity, if I draw that same thing with a regression channel, it's a little bit personal preference. If I go up to that, right, you don't get that same swing, right? Because it's factoring in all that price action. So there are times, right, there's a good example where you'd prefer it. Right now, of course, I have the benefit of hindsight here, but I can connect all of that right there, and I can get all of that right there. So that gives me kind of a better feel for self-containing here. So it's a kind of look and see, right? Well, what feels better to you? What looks better to you? Same thing down here, right? Again, right? So from this pivot, once I had this pivot, I'd use this, right? Even though it's not lower, because I want to factor in the averages. You do the same, right? Doesn't have to be in a downtrend. Here we could do the same thing here, right? It's going to factor in all that price action, right? Because here's the average price for that range. Right? So something to consider. So let me get these off of here, just as a less detailed, right? Let's pull your hair out. What the hell is it? Okay, let me go back here. Let's pull this back out here. So again, trying to keep it simple here as the Elliott count remains a bit elusive here. Some might think it's clear as a bell. I think it remains a bit elusive. Well, so here I brought out the wolf range here, so I'm just taking the swing low to the swing high. Now I'm out of log scale, so all I'm doing is just the last pivot low to the biggest swing high where I get the deepest retracement, right? So here's the swing, here's the retrace, thus the initial range. So here's 100. We just tagged 200. So if I take that out to a 4-hour, it kind of it gives you this sense of how the market seems to be moving in thirds, right? So I'll kind of just do it this way. I can do this, right? You can't do this in log scale. So if I just take that, okay, well there's the middle third. I struggle with these. They don't want to move. Yeah, fuck. Doesn't want to move. I guess hopefully you get my point here. All right, so we got the upper third and we got the lower third, right? We got no man's land in the middle. Right? They're in tick to tick balance. Right? From this low, here's the 100, right? We have perfect range separation here. So what do we do in the middle? Well, where's the opportunity? Right? So you might say this is the demand zone, this is the supply zone. Now those are pretty big ranges of supply and demand, but it's not a bad way to look at the market and say, okay, well if I'm coming back down into the middle, Well, what would I be looking for? Well, that ought to catch your attention right off the bat, right? The idea that we would come back here if we were going to come, right? If, heavy emphasis on if. If we were to start something, right? So if this is going to trade, if this is going to be a 3, if it's going to hold as a 3, and we're going to get some sort of a retrace here, boy, wouldn't that be the, well, if it's, let's assume it's going to break the first one, right? If it were going to break the first one and not bounce off of the structure, this would be, right, like just the obvious target. Well, then you'd be back here thinking, God, is that 1, 2, 3, 4, 5? Right? Well, the 5 to the 1, right? It doesn't quite work. So that's why, again, I come back here going, the Elliott is a little, I just need one more swing. Well, probably 2 more, right? If it's going to do this, okay, right, now I got an impulse. I got an impulse coming off of this low. Well, the problem is I've got an impulse coming off of that low already that is kind of inconvenient, truth be told, right? We really don't want this to be done here. Because what would that mean? Well, so either it's 1, 2, 1. Okay, right? Don't bogart the hopium pipe, right? 1, 2, 1, right? We're going to do 2. Careful, right? It seems like, oh, shit, well, we all know Bitcoin is, most bullish month of Bitcoin is always December. So it just seems like, oh, wait, man, of course we're going to go to 100 grand. Well, where's 200%? Where's 200, or pardon me, the 300. Next one would be 82. Oh, well, of course we're going to keep going. Of course. I'm long and holding, so I'm not going to be sad about it. But in terms of strategic entry, this is just still a little tricky. So if you acknowledge what's going on here, and then we take that same approach. Now I'm just going to hide the wolf range here. I wanted you to see that's not a bad way to look at the market. Well, we did the same thing here. Right? So let's go back to our regression channel. Well, we got this one. Right here on that break, right? And you could do the exact same thing. Just this is a really nice way to approach the bigger picture. All right, we break here. Okay, swing, swing, swing. All right, now let's just kind of keep that going and kind of show you there's 2 ways to do that. Of course, I could just go here and say, all right, well, as long as I stay within that channel, this trend remains alive and active and still rolling. Now, a bigger break from that channel, then something has changed. Well, of course, then there's the alternate, which you would want to, keep them over here in your little tree of indicators of what you want to use, because I would use that one, but let me hide that. But I'd also use this one. I'd go dominant to dominant, right? So let's do that one. Okay, now, right, a little throw over here, a little throw over here, but there's my median line. There's my average price. So as long as I stay within this. Okay, well, let's just kind of throw this up here. If this is 1, 2, is that 3, 4, 5? Now I'm at a log scale. It's not out of question, right? 1, 2, right? We didn't quite make our spot on there. I'm pretty close. We made the 1, 2, 7. 1, 2, just shy. That looks good. So 1, 2, we can label it. It's ugly. It's an ugly finish. I can't finish it cleanly. I don't see a clean finish, but okay, big picture, you could probably talk yourself into that and say, all right, well, it's a little squishy up there, but all right, close enough. Well, I don't like to trade when it's close enough. I want it to be, oh, that's the only thing it can be, right? So now I'm not, oh, that right? You can just see it there, right? Are we really going? Is this 1, 2, 3? Well, so for Jesus, even just trying to label that, right? So what are you going to do? 1, 2, 3, 4, 5. You calling that a 1? Sure looks like a 3 to me. Right? It's hard to turn that into anything other than a 3, right? Mighty hard, right? So assuming you're going to use the full candle bodies and wicks that are there, mighty tough, right? So right, we looked at the alternate that this would be the 4 at this degree. Now 1, 2, right? That actually would be the preferred count. You don't want this to be done here. You don't want that to be the 5. You want that 5 to be, if you're a bull, I'm assuming everybody's a bull, or has bull aspirations for the price. You may not be a bull today or this week or next week, but I'm assuming if you're watching, you're interested in the long side. We really going with a 1-2 there? All right. Let's get the... Okay. Boy, that's... I just... If you're... Well, sir, if you're a purist, I think that's... No way you make that count, right? You just don't, right? It's just not there. So if you're a purist, now if you're a little squishy with it and you're like, oh fuck, what? It's close enough. Well, you certainly make the case: swing high, swing low. I'm right in the buy zone. I'm right where I'm anticipating an algo to participate, right? It's not a golden corner, but I got a corner there. Oh, see, I don't like using that one. Right, because it's going to be too abrupt. So I'd almost rather come back here. Right, so I get a little more angle on that. 1, 2, we're doing that. We're doing that. All right, if we're doing that, well, if we're doing that, then we very well could be back here saying that's the 4. I still think it's, I think you got to go with the running flat there. 1, 2, would it matter? Oh, shit, here, let's get that. I can't move that. Right, now we're through the golden zone, but we have a valid Elliott count, right? So here, if the 4's here, oh shit, here. Oh, this would all be. Oh shit, how do we do this here? We're gonna do 3, 4, and oh, this would be. This is the 3 here. Sorry, and this is the 5 here of the 3. Right, so that comes in over here, this being the 4, 1, 2. Right, so this is what I mean. We need one more swing here to say, okay, can I get that bearish count off the board? I can't yet. So, but if I get this, I can. Right, so now, oh, all right, it's weird. Weird 4. Weird 4. That's a weird 4. But we come out of here. All right, we're testing it now. We come out of here, okay, right, bearish count off the board, right? Now it's just a question of, okay, right, we got to figure out which one is the 4, which we won't know until it starts to correct as to what we're correcting. But it certainly would play better with regards to this, let's pull out, to the idea that this is the 1, 2. 3, can I do it? No, I can't, right? So I was just looking to see if I could do a triangle. It's just not there. So this is the 4, and we're going 1, 2, and then we're going up to get those, get the 5. And then you'd have a little better balance here. 1, 2, if that's the 3, there's the 4, we're going up for that 5. Well, it's going to look a little better in terms of having the right look. Better, right? Extension in the, well, pardon me, right? Because this was longer than high. So it looks like the 3 is shorter than 1, but it's not. Right, so here, I mean, here's the 100, right? So we know it's not 1, 2, 3, 4, 5, weird 4, but up we go for the 5. Is there a trade there? Well, as I said, I think you could buy that right there. If you're anxious to get long going into the weekend, which is, I always think, not a great time, I'd love to be buying it a little bit lower, back in the high 50s, on the idea that we might have something like this. Oh, let's this being corrective, and we're coming down here right now. Coincidental that the regression channel is right there. Well, let's just bring that back into play. Let's see where that would land. Right at the regression channel. That's where I'd be more interested in being a buyer. Now I'd have that structure to work with, right there. So you look left, or pardon me, look to the right side. I can see I've got this little pocket of structure here to work with here. This would be the wave one high. I certainly don't want to overlap this. So now again, from low to high regression channel, right? I got over, oh, shit, I can't remember, 98%. Jesus, rusty on my statistics. I think it's 98% of all of the price action. To that is the median contained within these two bands, right? 2 standard deviations. That I really do not want this to be the 5. We don't want that to be the 5. 1, 2, 3, 4. Oh, at least we'd have a little bit better balance here between the length of time of the 2. Should the 4 get over here? Oh, it's never easy with Bitcoin. Okay, how am I doing? Oh shit, 48 minutes. All right, I better wrap it here. I was going to look at a few other things, but we'll do that on Monday on the alt live stream. I've got a few that are in my back pocket here that I think are interesting. We'll look at those on Monday. So members, be ready for that. We've got some new content coming out this weekend for you ninja traders. I tell you, so hopefully I just gave you a few things to think about. If you're anxious to be a buyer, well, that's the place to be a buyer. If you want to be a little bit more conservative, I'd be looking down here, 57-ish, just to get a little more clarity on where we are. All right, guys. Hopefully that helps you some small way. I think that covers everything I've got. We've been over bull, bear, all the possibilities here, a little bit of raw dog TA. Okay, there you go. With that, I wish you guys a happy weekend, and we'll be back on Monday for that alt live stream with members content and a few that I've got my eye on. Okay, guys. Have a good week.